Welcome to the B.F. Anderson Technical Report for December 23rd. I want to wish everyone a Merry Christmas, Happy Holidays, and let's have a good new year. So far, the trends are looking good. We're continuing to see new highs on the NASDAQ. The lower moving average is an uptrend, and volume has been very positive. The weekly graph continues to look strong. However, I will note that we do have quite a bit of white space in here, and just like this correction here, it's just something to be psychologically prepared for. Now, on this particular indicator, I went back in time just to kind of make a point on it. You can see here that the ratio, which is the NASDAQ compared to the consumer staples, has been a very effective tool on telling us market bottoms and market tops. So you can see the correlation here very clearly that once you get that golden cross, the market tends to put in a bottom. Well, we got a death cross back here last year, but now we're starting to get a golden cross. You can see it more clearly here. And back to what we talked about last week, we had, on this particular uptrend, we had 10 months of uptrend, 24 months of trendless, and then we had 28 months of uptrend, and we're currently in somewhat of a trendless situation, but definitely improving. You kind of notice down here at the S&P 500, we really haven't gone anywhere since September of 18. The market is relatively flat. We have just now started to break out. This could be really just the beginning of a new growth stock cycle, which I hope is going to last 1 to 5 years. It could be that good. Now, this is the same thing again. This is the XLK versus the XLP, which is the tech sector versus consumer staples. You can see the same basic pattern. However, it has broken above a trend line and is definitely in a strong uptrend. You can see at this last bottom we had back here in 16, the same thing occurred. So we're starting to see some definite improvement in the ratio. Global Dow, we're seeing improvement there, basically a breakout above the consolidation area. The international stocks are starting to look good, and that's very positive. International stocks have been on the rocks for quite a while. Now, the value line geometric, same story. Now, just to realize again, just to rehash this, top. So this becomes resistance. We've got to get through this. Now, if you realize that, at the beginning of this year and the end of last year, we were basically at the same levels we've been at for approximately 20 years. So anyway, improvement there, looking better. Now on the small caps, we continue to see, a golden cross and looking positive. Again, this has been a very effective way of seeing when the small caps start to outperform. Now the small caps are going to be where the most money is made. NASDAQ on the MACD, we're continuing to see improvement there. We got the buy signal back in November, seeing a very strong momentum here. Now, you have to realize, too, last year appeared to be a bear market. I mean, very deep momentum last year, right at the end of the year last year. Now, on the small cap index, just to look at the MACD there, we're seeing a definite improvement. The small caps have not made a new high, just like the S&P and the NASDAQ and the Dow. All these big, large cap indexes are making new highs, but the small cap has yet to make a new high. Looks like it's going to, though. Same story with value line geometric. We have not seen a new high there. If this particular index gets into a strong uptrend, that's a very positive sign. Now, one other factor that we look at is the percent of NASDAQ stocks above their 200 exponential moving average on a daily basis. Now, what we're seeing here is what we call a blast-off indicator. You get real oversold, get real overbought, market continues to go into an uptrend. This has happened 4 times prior to the most recent blast-off, and in each of these particular examples, a year later, 100% of the time, the market is higher on average of about 14%. So this indicator is telling us that something has changed here. We went into a really bad bear market, came right out of it, just like the crash of 87, came right out of it, and now we're hitting a key area which tells us the market is probably going to continue to move higher. These are some of the leading stocks. This is Lam Research, semiconductor manufacturing. Qorvo, which is a semiconductor manufacturer, mainly a 5G play. They make the antennas that go into 5G devices. Seattle Genetics, we're continuing to see biotech come onto the scene. You got a nice spike here in volume. The stock looks like it's trying to go higher. Skyworks, which is in the same basic business as Qorvo, again, semiconductors. And then last but not least is Tesla. With Tesla, one of the things to realize is there's a very heavy short position in the stock. Approximately, as of the end of November, approximately 30 million shares are short. And those shorts, if they start to cover, could really cause what we call a short squeeze. It may be already happening. So all in all, everyone have a great holiday season. And if you have any questions, please give me a call.